Hi everyone, welcome to today's webinar for self-employed and business owners that live abroad. So whether you're a one-person show or you have 50 employees or more, this webinar is for you. So before we start, why are we even here? Well, we're MyExpatTaxes, the leading US expat tax software in the market. We designed this tax software for US expats, Americans living abroad, because as you know, there's just not that many services that are catered to us. And who am I talking to you? Well, I'm Nathalie. I'm the CEO and co-founder of MyExpatTaxes, but most importantly, I'm also American abroad. I was born in San Jose, California, and I now live in Vienna, Austria. And basically, I am here to help you navigate through this very complex tax situation, especially if you have a business. So what will we talk about today? Well, we'll talk about different company types because it's not one size fits all when you have a business. We'll talk about self-employment tax, which is really important because that is a situation where you may actually end up paying taxes to the US. And we'll talk about a very complex and ugly form that people do not like, but unfortunately does get included a lot of the times, which is Form 5471. You will know those numbers by heart like I do. And of course, at the end, just what are common self-employment profiles, which one do you fit in, and kind of how do you go from here? So obviously, we'll also talk about basic tax things, right? I won't give you everything, but I'll give you enough that you can walk away from this webinar feeling a little bit more confident about your taxes, or maybe you'll be so savvy, you'll just do it yourself, or you'll use MyExpatTaxes, whatever floats your boat. So different company types. There's a lot of different companies setups that you can have as a self-employed person. You could be a freelancer. You could be someone that has a registered company without limited liability. You could be someone that decides that you want to set up a separate entity that has limited liability so you're protected from the business. You could be a foreign disregard entity, a US single member LLC. I'll stop naming them. You can see it on the screen, but there's a lot of different business structures. The most important thing in all of this for you to understand though, when you're filing US expat taxes is, do you have limited liability? So limited liability, like I said, is when you set up a business entity that is separate from yourself that has the liability for essentially the operation. So you as a partner or shareholder, you're not held liable for what the business does. This is very common if you have a lot of employees, if your business is a lot bigger. Not very common, obviously, if you're a one-person show. But basically, when you have limited liability, you step away from being a private person and you step into the realm of being a company. And when you have a company, basically, you need to start thinking about what you have to do to report that company as an entity versus just plainly reporting your business on Schedule C of your US tax return. So we'll talk about that a little bit more. That goes into the realm of 5471, but that's something you should have in mind as we get started, right? Is do you have limited liability or are you more operating as a private person offering your services? And if you're the first kind, so a private person offering your services, so more of a freelancer, or maybe you do have a company, but it does not have limited liability, you may be subject to self-employment tax. So self-employment tax is pretty much what gets most expat tax filers that have businesses. And this includes digital nomads. So essentially it is Social Security and Medicare taxes. So because when you are an employee, normally you have those taxes withheld from your wages. If you're self-employed, you are responsible for withholding those additional taxes. So not just income tax, but all to do with Social Security, health insurance, et cetera, et cetera. So this is approximately about 15.3% of your net profit would be the self-employment tax in the US. Now, that sounds like the law, and it is. It's a pretty penny to pay to the US, even if you don't live there. However, there's obviously some exemptions, which is what US expat taxes is all about, finding the exemptions, finding the benefits. So if you live in about one of 30 countries with the Totalization Treaty, and I'll flash to the next screen of what those countries are, you may be eligible to use that Totalization Treaty. So that's essentially like a tax treaty. however, specifically for Social Security. And what that will say is that if you are registered as a self-employed person in your local country and you're paying the appropriate Social Security taxes in your local country, you do not have to pay that amount in the US as well. So very important, because this exempts you from that 15.3% self-employment tax. Now, what you need to know is obviously you have to be registered in that country. So if you're a digital nomad and you're just skipping between countries as a freelancer, you're definitely on the hook for US self-employment tax. However, if you are a small business owner in Germany, in Austria, etc., and you're paying self-employment taxes there, you normally do not have to pay any US self-employment tax at all. So in order to claim the Totalization Treaty, it's a bit tricky because what you'll need is something called a certificate of coverage, which is notoriously hard to get. If you go to the local authorities in Germany, in Austria, and the UK, 1% of them may know what a certificate of coverage is. 99% of them will have no idea what this piece of paper is that you need to exempt yourself from US self-employment tax. So the practical way of claiming the treaty is essentially you claim the treaty on your tax return via a written statement, and if needed, the IRS will ask you later for a certificate of coverage and or some other type of proof that you pay Social Security taxes in your local country, such as a local tax return. So just keep in mind, it's very common to claim the Totalization Treaty. Can be a little bit tricky because you technically need this certificate of coverage. So if you can get it locally, I recommend you do so. However, I can tell you that most expats cannot get their hands on it. So what they'll do instead is keep records of their local tax return. And in the very, very, very rare case that the IRS asks for it, you can send that in as proof that you're paying Social Security taxes abroad. Now, if you can't get an exemption because one, you are not registered and paying taxes in any country, right? Or you basically don't live in a country that has a totalization treaty, it's not terrible. So basically, if you have enough self-employment income that you pay Social Security taxes on, right? It's about $6,000 and over, it increases a little bit every single year. If you have that much and you pay that 15.3% self-employment tax on it, you actually get the maximum of 4 credits towards your Social Security benefits account. And this is really important because if you have enough credits, guess who will be getting Social Security checks when they retire? You. So it's not all bad to pay self-employment tax. It hurts. It definitely hurts to pay another 15.3% tax. However, if you pay it, you can accrue enough credits that one day when you retire, you'll not only be getting Social Security benefits from your local country, you'll also be getting a check sent, well, hopefully direct deposit, right, in this day and age. But basically, you'll still be getting Social Security benefits from the US as well. So, hey, also not a bad thing. Now, what are the countries that have a totalization treaty? Well, they are all here on the screen. I will not read them all out for you. You can definitely have a look yourself. I just give a call out. Almost all totalization treaties are the same. If you live in that country, if you are registered there as self-employed and you're paying the appropriate taxes, you do not have to pay US self-employment tax, except for Italy. Italy is very interesting. Italy says if you are a US citizen, living in Italy and you're self-employed, then you will still have to pay US Social Security taxes, but you do not have to pay Italian Social Security taxes. Now try to tell your Italian tax consultant that one. I don't think they'll believe you. If you're Italian and US and you're living in Italy, you can opt into the Italian Social Security system. I know, I don't know why Italy decided that they want to be different. Just a call out for you. So prepare for that. Otherwise, again, if you live in a country that's not on this list, expect self-employment tax if you have a self-employment role and you're claiming it on your return and you have over $400 in net profit. Not fun. However, you are accruing Social Security benefit points so that you can one day hopefully get US Social Security. Not all bad. Okay, next one. So that was for, self-employment tax, mainly people that don't have a limited liability company. Now, what happens when you actually incorporate a company abroad? you will have to unfortunately disclose that company on Form 5471. You can probably tell by the amount of text on my slide, it's a really complex form. Now, main things you need to know, this form is very important. What it does is it says, hey, IRS, this is the company I have. This is the shareholders inside that company. This is how much income that company has made. This is the balance sheet. And then from there, what you will have to do depends on kind of what category of filer you are. So there are essentially 5 different categories of filers. This gets very complex, so I try to simplify it. You don't always have to file a 5471 if you have a foreign corporation, but you will have to file in 2 different instances. So the first instance is if that company is essentially majority US owned. So meaning you as a US shareholder, or maybe other shareholders are also US persons, if you own over 50%, that's now called a controlled foreign corporation. In that instance, you almost always need to file 5471. Another instance, not necessarily that a US person has majority control, but if you and perhaps your non-resident alien spouse, aka non-US spouse, or another family member of yours, if you own majority together of all the shares, so say you own 40%, your spouse, which is not a US citizen, owns 60%, this is another situation you might have to file Form 5471. I lied, I said there were 2 instances, there's actually 3. The third instance is basically what we call a, what do I call this? Kind of a transitional year, or basically a year where something happens. So if you owned over 10%, and in that year, there's a change in shareholding, whether you acquire more shares, someone else acquires more shares, and or shares are disposed of, you may also need to file this form. So those are kind of the 3 general instances where you would have to file the form. Now, the form is not easy. As I said, there's a lot of information on it. I think, if anything, what hurts the most is the fact that paying to have this form prepared for you is very expensive. So this is definitely on the higher tier of kind of tax products that you would buy. However, if you do not file this form, the IRS does impose up to a $10,000 penalty. Whether or not this is legal, I leave it up to, all the court cases that are battling it. But generally, if you don't file this form and you need to file it, there is a $10,000 late filing penalty. If I said that, you think you have to file this form, you're freaking out now. Breathe, relax. I will come to a later point in the presentation about the streamlining procedure, which can help wipe your slate clean. So to recap, if you are a private person and you don't have a company, you're probably dealing with self-employment tax. If you are having a foreign incorporated company, you're probably dealing with Form 5471. So unfortunately, it's just not that simple in any case if you have a business abroad. Now, like I said, again, kind of common self-employment profile. So where do you fit in? So this is kind of the 3 main groups. If I don't cover you, I'm sorry, but you can always send us an email afterwards and we can talk about your situation more personally. Regardless, here you have the digital nomad. You're a freelancer. You're probably using foreign earned income exclusion to get rid of any income tax up to the allowable amount, but you're subject to self-employment tax. You're a self-employed person abroad, so you're not a digital nomad, you're actually living in a different country, you're registered, you're a small business owner, you're still probably a freelancer, and you can use foreign earned income exclusion or foreign tax credit because, again, you pay taxes abroad. And normally you can use the Totalization Treaty if you live in one of those 30 countries I named. And then this will normally result in 0 taxes owed. So I think that's the situation that most folks will fall in that have businesses abroad. And if you're a business owner, so you actually have a company incorporated, you probably have some type of salary or dividend income that's just going to be reported as such. So wages and or dividends, it could even be considered qualified dividends on your tax return. You'll use foreign earned income exclusion or foreign tax credit on the money that you pull out from the company. And then you'll also file Form 5471 if you need to. And if you're a controlled foreign corporation, so again, if more than 50% of the company is owned by US persons, you will definitely have to expect the possible guilty tax. If you're not in this case, you can just stop listening now because this gets a little more complex. However, again, GILTI is a tax that is imposed on any net profit from your company that's calculated on 5471 and all the schedules attached. There is no real possibility to use foreign earned income exclusion, foreign tax credit, but there are ways to reduce the GILTI tax down to zero. Now the good side, no self-employment tax, but possibly GILTI tax. I know there's no win-win in this. Let's move on. As I said, there's no win-win. Do you have to file? Why do you have to file? Why are you even in this mess, right? I'm sorry to say it comes from US citizenship. So whether you have US citizenship or a US green card, you need to file a tax return if you meet the filing thresholds on the screen. They increase every single year for the most part, and they're in line with the standard deduction. The exception would be married filing separately. Ever since 2018, they decided that if you want to file as married filing separately, if you make over $5, you gotta file a tax return. It is what it is. Your standard deduction is higher though. It's the same as the single standard deduction. So even if you don't meet those filing requirements, you may still have to file a tax return because say you have self-employment income. So if you have self-employment income over $400 in net profit, you have to file a tax return because you may be subject to self-employment tax. If you have a foreign corporation, you may also still have to file Form 5471. So, you know, take it with a grain of salt, but usually if you're a business owner, you should be expecting to file a US tax return. Now, as I said, if you were freaking out that you weren't filing properly, it's okay. There's always some way to correct the situation. So the IRS has a program called the Streamlining Amnesty Program, essentially, and what you have to do is you only need to file 3 back years of taxes and 6 back years of FBARs. And normally in this case, once you file those tax returns, your slate is wiped clean. You are caught up. There's no late filing fee. So even if you had Form 5471 and you didn't file it, the IRS will not impose $10,000 with interest and late filing fees because that's just ridiculous. What they will do is say, thank you for going through the streamline filing procedure. We will not impose any late filing fees. You're all caught up. Just keep on filing from here on out. So that's definitely a good option to try. I will warn, as I said, it always gets more complex if you have a business. If you are in a situation where you had a foreign corporation that was incorporated before 2018 and you had retained earnings, yes, that's a mouthful, expect to be filing back to 2017. So you cannot just go into the normal program, you have to file back to 2017 because there was a transitional tax law that was applied. Not fun. I wish you luck if you're in that situation. We can definitely help you through it, but I will warn you, it's not pretty and it's kind of expensive, but it is what it is, right? So with that being said, if you're streamlining, some things to keep in mind, you'll have a lot of papers to print out in mail because streamline returns cannot be e-filed, they have to be paper mailed. However, we will be happy to e-file your current year tax return, which is currently 2022. So you might also be up for some refunds because we had the stimulus payments in the past years. There's refunds from the additional child tax credit. So it's not all bad. I've definitely seen people who have come in fearing for the worst, getting thousands and thousands of refunds at the end. Not all bad, but you have to start the process to know what the situation will be. So if you're filing normally and you're not worried so much about getting caught up, here are just some deadlines to keep in mind of. You know, obviously we've passed a lot of the deadlines, but the one upcoming would be the October 16th deadline if you had an extension. If you have a foreign corporation and you don't think you'll make it till October 16th, this is not on the screen, but very important for you to know, is you can still write a letter to the IRS to get an extension till December 15th. And that will help make sure that you don't have any late filing fees on your Form 5471 if you have to file that. A lot of information. I hope you are not too exhausted from that. Like I said, business taxes is not easy. The main thing for you to realize is, again, if you're more of a freelancer, a private person, you don't have a company, your main problem is self-employment tax. If you have a company abroad, your main problem is trying to figure out if you have to file 5471 or not, and if GILTI tax is applicable to you or not. So with that being said, I'm sure there's a lot of questions. You can always join our Facebook group to ask questions there. You can always email us for questions, or you can just stay tuned for the live Q&A that will happen after this. I hope you feel a bit more educated on US expat taxes for businesses. Again, a lot of information, a lot to digest. Just know MyExpatTaxes, we got your back. It's complex, but it's only complex the first time around. Afterwards, it will be smooth sailing and we'll be with you the entire way through it. Thank you so much for joining. All good?